All right, we'll get moving here on chapter 5. So I think I graded all the Tax Act submissions. So if there are any, I won't generally make a comment on it if it's all okay. But if there are any deductions and points, I do let you know where you went wrong. I do still see, and I can't remember if it was this class or the online class or kind of a combination of both. Just a couple things that I noted. So there's still some students that aren't adding their names. I don't necessarily think it was this class because I pretty much drilled that home. Adding their names to the client name, and that will lose you 2 points for forgetting to do that. And then the digital assets question, which is an easy one to overlook. I do deduct just half a point for it, but it is one of those critical questions that if it's not answered on a tax return, the return will get rejected. So it is one of those critical ones. So I just, don't take it personally if I'm listing out where you went wrong. I'm trying to correct you for the future, and that seems to be the best way as well to get students to remember to do those things is when there are consequences. So anyway, but overall, it's looking really good with that Tax Act. It will get more complicated. As you notice with this chapter, it got more complicated, but it will continue to, we'll just keep kind of adding on, not with the same clients, obviously, but you'll see some of those schedules. I mean, that Schedule 1 will come back many times, and that 8812 will come back as well. But in this chapter, we're gonna add what's called the Schedule A, which is for itemized deduction. So if you recall, we'll go back to our tax formula. So we've got our gross income minus our adjustments. And these are our above the line deductions. To get to our adjusted gross income, and this is the line. And then below that, we've got additional deductions. We have what we've worked with so far, standard deduction, which everybody gets the standard deduction unless their itemized deductions are more generous. So you get whichever is going to give you the most benefit, but you can't take both, right? So we got the standard deduction or itemized deductions. And these are our below the line deductions, or as your book calls it, so for AGI, from AGI. So that just means, of course, the subtraction is coming after AGI to arrive at our taxable income. Now you'll see there is another deduction that's tucked in here. If you look at the 1040 that we're going to talk about in chapter 6. And this particular deduction is only available to individuals who have businesses, qualified businesses. It's called the qualified business income deduction, QBI deduction. So we'll get more into that one in the next chapter, but that's why you kind of see 2 of them, but I'm not going to mention it at this point. It's only pertains to those with business income. But for our purposes, this is what we're going to talk about in this chapter, are these itemized deductions. So if we're taking itemized deductions, we are not taking the standard deduction. If we're taking the standard deduction, we're not taking itemized deductions, and we're going to take whichever one is going to make this number the smallest. So we want, between these 2, we want the largest of that. And again, standard deduction is going to be based on filing status. Itemized deductions, trying to think here, are not based on filing status. So a single person that has itemized deductions of, let's say, $18,000 may want to itemize their deductions. But a married person with $18,000 of itemized deductions is going to want to take the standard deduction. Okay? So again, it's going to be whatever is most favorable based on your filing status. Right? There are Itemized deductions used to be a lot more important than they are now. And not to say that they're not important, but a lot more, a lot more taxpayers used to take advantage of them. And excuse me, I don't mean take advantage in a negative way. I just mean they used to use them and file that Schedule A. But in 2017, when they passed the Tax Cuts and Reconciliation Act, they changed a lot of things with regard to itemized deductions. Now, I had mentioned before that there was another big change. Those exemptions went away, where it was like $4,000 per person. It was kind of like an extra deduction. That went away. In addition, they changed the standard deduction. They raised it. They made it a lot larger. And they also took away a lot of itemized deductions. So more and more people fell into that camp of it being more advantageous to take the standard deduction than to itemize, because as that standard deduction went up and then the opportunity for itemized deductions went down, obviously more and more people are just going to take the standard deduction. That's simplified matters. It's simpler if you don't itemize deductions. If you can just take a flat amount, that is a much simpler process. However, there are still a lot of taxpayers out there for whom it's more advantageous to take these itemized deductions. But what it does mean is that, I mean, just like the word says, they're itemized. You got to list them out. You got to do some calculations. You got to figure out how much of these deductions you're actually entitled to. So there's more calculation and more intricacy that's involved. I don't know what the exact percentage is, but I think it's less than, I know it's less than 10% of taxpayers itemize their deductions. The vast majority now will just take the standard deduction. But like I said, we still need to look at it because it's still a substantial deduction for a lot of taxpayers. These are the main, well, these are pretty much the only itemized deductions that we have left. Medical expenses, a lot of people are kind of familiar with this. You know, they've got the idea that they need to keep all of their medical receipts and everything, save all of your receipts for your itemized deductions. That kind of used to be the case, but now with fewer people taking itemized deductions, it's not so much. But anyway, medical expenses are a big category of itemized deductions. State and local tax deductions. Here we're talking about state income taxes that have been paid, local income taxes if you live in a jurisdiction that applies income taxes, property taxes, as well as any taxes that are paid on your vehicle, like your annual vehicle registration, that sort of thing. Now that one's got a bit of a caveat to it that we'll talk about when we get into the state and local tax deductions, but that's what we're talking about here with these deductions. Interest, biggest chunk or the biggest category in the interest deduction is the mortgage interest deduction. So for those individuals who own homes and have borrowed in order to purchase that home, there is a deduction for the interest that is paid on that home. There is also investment interest, which we will talk about as well. That is part of that interest deduction there. Charitable contributions, this is also a big area. Both cash and non-cash charitable deductions. Cash, think, you know, checks that you write as a contribution to the church or to some charitable organization. Non-cash, think, you know, those, you're cleaning out your closet and you're putting together your bags to take off to Goodwill, that sort of thing. There are other types of non-cash deductions too, though, that a lot of people make, and we'll go through what some of those are and how we figure out what the deduction is for those. Casualty loss deduction, this is a really short conversation because they include it. Not many people get to take advantage of it. There's a calculation that goes along with it, but here we're talking about individuals who have had some sort of loss due to maybe fire, theft, environmental things, that sort of stuff. So where there's been a casualty and you've lost value in an asset, okay? And then we've got a few other little itemized deductions that we're gonna talk about, but there's not much really in that category. So that's what we're gonna talk about in this chapter. So another schedule, Schedule A, I'm gonna write that one down. got some music to accompany us today in our journey.